My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people, my friends, I'm just trying to make you some money. My job is not to entertain, educate, teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Now, if you're tearing your hair out trying to figure out what's driving this market, you are not alone. And that's especially true on a day like today, where the Dow gained 91 points, S&P advanced 0.16%, and the Nasdaq declined 0.24%. I take last night, all right? So I'm sitting at the bar at Mr. Chow's, the one at 57th Street in Midtown, patiently waiting for Salesforce CEO Mark Benny. I have to come from California to appear at my corporate governance conference tomorrow, where we're discussing how business can be the greatest platform for social change. Very nice guy comes up to me, gives me the now usual fist bump, right? Like there's no COVID on the fist, huh? And wants to know when his stocks will stop going down. So I say, is it FANG? He said, yeah, FANG and FANG derivatives. I said, all right, I don't know when natural gas is going to go down, stop going up. But if you can tell me when natural gas goes down, that's when FANG stops going down. The moment I said it, I realized how stupid it sounded. And it sounds stupid because it is stupid. The stock linkage is real, even as the real-world linkage smacks more of fantasy than fact. Tech's been getting hammered because bond yields keep climbing, as nobody on Wall Street wants to own tech when interest rates are rising. Why are bond yields going up? Well, in large part, it's because natural gas prices keep soaring. So if nat gas can stabilize or go down, maybe bond yields can come back down, which would then bail out the tech stocks so many people love. And that's exactly what played out between 4:30 this a.m. and about 10 a.m. Of course, when a linkage gets this attenuated, it makes you wonder if the market has completely lost its mind. Do we really believe Apple stock should rally if natural gas falls from $6 to $5.50? Apple's market capitalization might literally grow by $50 billion if natural gas breaks down below $5.50, even though there's no direct connection. But like it or not, that is how this market works, at least for this moment. What makes this whole thing so galling is that natural gas has been rallying in this country, different from the rest of the world, for no particularly important reason. We have more natural gas than we know what to do with. Some of the less responsible producers still burn off their excess supply when no one's looking because it's cheaper than finding new storage space. So how the heck did it fall to $6 yesterday, almost double where it was a few months ago? Well, there's obviously been some hurricane damage, but a lot of it's because there's just not enough pipeline capacity. And we keep having trouble siting and adding new pipes. Tons of gas is effectively trapped in Ohio and western Pennsylvania. I mean, two of the largest fields in the world, and they can't be tapped as much as they should, and they would be if we didn't have such strictures, and the price of the commodity would be much lower. So then you have to ask, why is it landlocked? All right, let me give you a real-life example. Earlier this month, a 120-mile prospective pipeline got shot down. This would have brought 1.1 billion cubic feet per day to Pennsylvania and New Jersey from the western part of Pennsylvania. I know the pipeline's path. It would have come incredibly close to a farm I used to own, but my ex-wife, Karen Cramer, and all the neighbors were against it. I probably would have been, too. I owned another property in Pennsylvania where a pipeline went through, and they were always traipsing around unannounced, checking it out, and then they gave me a cheesy calendar for all my troubles. No thanks. So I might as well have told my inquisitor at Mr. Chow's that Apple and Amazon went down because of Karen Cramer. I mean, that's how absurd this linkage has become. When certain stocks are presumed to be worth much less every time bond yields make even minuscule moves higher, the interest rates go higher because of nat gas prices. You know those Karens. But it's not just the tech natural gas linkage. This market is full of absurdity, and it's very upsetting. I'm going to give you another one. Warby Parker came public today. This is a vertically integrated eyeglass maker with a digital footprint and a bunch of brick-and-mortar stores. I talked about it last night. I think it's a good company. It's not a great company. I told you not to touch the stock above its reference price of $40 because the valuation would just be impossible to justify, if not silly. In part, that's because Warby Parker did a direct listing, meaning it just plopped down on the exchange to fare for itself. And in this case, they don't even have a lockup on insider selling. But today, the stock instantly jumps to 54. It's got a $6 billion valuation. That's lunacy, people. Last year, Warby Parker raised a bunch of money at $3 billion, and almost nothing has changed since then. So either the people who got in on that last round of private fundraising are some of the savviest investors in the world, or the people buying it up here today are a bunch of suckers. I'm guessing the latter. Of course, this is not unusual. About 5 years ago, I had a cup of coffee at a place called Dutch Bro in Ashland, Oregon, where my daughter was living at the time. Everybody loves Dutch Bro out there. They got these kiosks in parking lots, and somehow they remember your drink from month to month. When the company came public 2 weeks ago, the IPO priced at $23. Then the stock opened at $32.50, up 41%, before surging nearly $55 over the next couple of days. Since then, Dutch Bro has settled down in the mid-40s, $7.3 billion valuation. Well, at least it's actually profitable, unlike Warby Parker. I know, adjusted, they're profitable. Give me a break. Again, Dutch Bro is being valued not by its prospects, okay, but by the taste of its coffee and the front of the kiosk. I doubt anyone involved in this deal from the banking end has a clue how to explain why this stock should trade where it does. It makes no sense. But like Warby Parker, sense don't matter. People like Warby Parker for the style. They got an army of hipsters customers already taking over Brooklyn, even as it has less than 200 stores. They like Dutch Bro for the incredible amount of caffeine they put in each cup, even as it has fewer than 500 stores. I never got to spend enough time with my daughter up in Ashland. So you know what I did? I always went for the Annihilator at Dutch Bro when I hit that great town on Friday night. And then I didn't have to go to sleep until Sunday. Yeah, because each time I was about to fall asleep, I just had another Annihilator. I was so charged up with those Annihilators that I was able to climb Upper Table Rock, 2,000 feet, with my daughter screaming, "Daughter," by Pearl Jam, all the way. All right. You could argue that moment and singing Eddie Vedder's Black on the way down, plus a cup of Dutch Bro, is easily worth $7 billion. I mean, really though, these are companies with famous brands that have their own squad of cheerleaders. And I don't know how long that's going to last. People constantly cheer for football teams that have no chance of winning whatsoever, at least without the point spread. Doesn't change the game. If you cheer for the Jets or Southern Oregon Raiders, you might also like buying Warby Parker or Dutch Bro. I mean, at this point, it's pretty much the same thing. There's just one problem. Stocks aren't football teams. When the insiders get a chance to sell, and in the case of Warby Parker, they can start immediately, then it would be nuts for them not to blow out of as many shares as they can, because they know better than anyone that their stocks can't stay up here in la-la land, pinned by their popular products or their incredible Annihilator caffeine that makes you sing Yellow Lead better at the top of your lungs. The bottom, it's Eddie Vedder. The bottom, and Karen Cramer, don't take that personally. Anyway, the bottom line, yes, we're in a market where natural gas pipelines control Amazon, while newly public stocks trade on style points or Annihilators and coffee kiosks. They're all part of the lunacy of the moment. Is it crazy that the market works this way? Sure. But then again, it's also crazy that I believe in the long-awaited rematch of the New England Patriots and my beloved Philadelphia Eagles in next year's Super Bowl in L.A.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.